So in this video, I'm just going to be breaking down why structure is so important and how we can actually use structure to tell us who's in control of the market. And also going to break down a trade that I took today at the end of this video and just take you through my thought process behind it. Welcome back everyone. If you're new to the channel, welcome. Like I said in the beginning of the video, I'm just going to be talking about why structure is so important and how we can actually use it to understand who's in control of the market, okay? Just quickly before I start, if you guys want to learn a lot more about this topic, my course breaks this down in a lot more detail, while also going through a load of other price action and important key foundations in trading Forex, while also guiding you through building the correct strategy and the correct mindset and what it really requires to be consistent in Forex. If that sounds good to you guys, link is in the description, be sure to check it out. So let's break down Euro US dollar, okay? Let's take a look at the price action, let's take a look at the structure and what it's actually telling us, right? So we can see here, okay, that we made higher highs, higher lows, higher highs and higher lows. What do we need to see after a higher low in an uptrend, okay? I'll give you guys a few seconds, comment down below, what do we need to see? Right, so I hope all of you guys said higher highs or new higher highs, okay? In an uptrend, we need to see new higher highs. If we're failing to see this, this can be an indication to us that the trend is changing or that the sellers are stepping in, okay? This principle and this concept applies the exact same for a downtrend, okay? If we're failing to see new lower lows, this can indicate to us that the buyers are stepping in, okay? But just taking a look at the uptrend example, right, what can we see? We see here that price made that higher low, but we're now pushing up and what we needed to see was a higher high. But what in fact we're seeing is a failed attempt to make that. We're failing to break this recent higher high we've made, okay? So this can be an indication to us that the sellers are actually stepping into the market, okay? I'm not going to break down how we can enter and how to get them sniper entries or the best place or what to look for in the lower time frames. This is everything my course will break down and take you through, okay? But we're just looking at pure price action and structure for now, okay? So we see here, right, price pushed down, higher low, pushing up. This is now looking like a lower high, okay? And this can indicate to us that the sellers are stepping in. We can also identify that we're having multiple wick rejections, which means that higher prices are actually being rejected, okay? Using price action and using candles, we can also identify what's going on, okay? We see here that we have a bearish hammer doji, okay? If you guys seen some of my other videos, this candle basically means that there's a lot of sell pressure, okay? Or that the sellers are stepping in. But what we've done is we've taken apart the price action and looked at actual structure, okay? Prices failed to make a higher high. So this can indicate to us that the sellers are stepping in, okay? We can enter once we identify the end of the exhaust or just the end of price failing to push up, okay? And this is what it's looking like on our chart here and on this example. So what we can do is we can enter, okay? We can have our stop loss above structure and we can go for whatever your guys' strategy tells you to trade, okay? I like to trade a 1 to 2, it's just my personal preference, right? So what have we looked for? What have we done here, right? We have seen that price was trending up, okay? Price is pushing down, we made a higher low. What we needed to then see is higher highs. We have failed to see any higher highs. We see price pushing up, failing to push any higher through wick rejections and then a bearish candle. We can then take this as a confluence to enter the trade and to tell us and indicate to us that the trend is changing and that the sellers are now stepping in, okay? Okay, so this is how this trade played out, okay? We identified that price was trending up. We failed to see any new higher highs. We then saw price failing to push any higher. We saw wick rejections. We then saw bearish hammer doji. Just these three confluences, we were able to find a trade, understand that the trend was changing, and take an entry, okay? Let's just now take a look at the trade I took today, okay? Using the same principles that I'm talking about and what my course talks about, okay? Just looking at pure structure, looking at how structure is changing and how it's telling us who's taking control of the market. Okay, so take a look at this trade, guys. If you follow me on my Instagram, Forex_Loz, you would have seen the process of this trade and how it turned out, okay? So in the beginning, right, we could see price was trending up. Same as that example I just showed you. Price was trending up, higher highs, higher lows, higher highs, higher low. Price was then pushing up, okay? What we then needed to see is new higher highs, okay? But we failed to see that. We failed to see price making new higher highs, which we need to see to continue in an uptrend, okay? We then saw these wick rejections. Same again of what we saw in that 4-hour example. And guys, what we need to remember, right, is this is something that my course also talks about, is that structure is structure no matter what the time frame. It doesn't matter whether it's the 5 minutes or the 4H. If structure is failing to make, or if price is failing to make the structures we need to see within a trending market, this can indicate that the trend is changing, okay? So we can see higher lows, we need to see a higher highs. Price failed, we saw wick rejections, we saw these shooting star bearish dojis, okay. I then entered once price pushed below this candle here. I entered before this closed, but I entered once price closed below this candle, because this told me, right, because if price was going to continue up, okay, it would start pushing up, creating that higher high within that push phase, okay, because look, push, exhaust, push. But through these wick rejections and through price failing and struggling to make that higher high, this indicated to me that the sellers were stepping in, okay. You could say I entered early and that we could have entered on a double top pattern, but just looking at pure structure, this being the double top pattern, okay, but just looking at pure structure, we saw that price was trending up, we saw the higher low, we failed to see higher highs, I identified the wick rejections that was meant to be at the higher high, we saw price failing to push any higher, I then entered once I started to see price pushing down. Almost the exact same example as that 4H example. We had that price pushing up, price came down higher low, price tried to push up to make the higher high, but it failed, okay. We then entered on the bearish candle, indicating that these sellers are stepping in. What we need to remember, guys, is that we aren't always going to win every single trade that we take. This is just running out probabilities. This is just playing out the probabilities. This trade could have easily gone bang, bang, double bottom, shot back up, okay. But just by understanding structure and by watching structure and understanding how it's moving, right, we're failing to make new higher highs. So this can indicate to us that these sellers are stepping in. We were in drawdown for a little bit. We then had this beautiful shooting star doji, and then as you can see, look, price instantly dropped. And if you guys want to know the risk to reward, it's 2.2. I trade 1 to 2 trades. It's just personal preference, and this is just how I like to trade. I hope this made sense for you guys. I hope you took in what I'm saying. And what I'm basically saying is just that we need to look how structure is playing out, okay. Look how structure is moving. Are we failing to make new structure points, or are we making them? Are we continuing the trend, or is price failing to make the new structural points we need to see within the trending market? If you guys like what I'm talking about, my course breaks down everything I'm talking about in a lot more depth and a lot more detail. Like I said in the beginning, I've had absolutely positive feedback from the course, which makes me more than happy. Link is in the bio if you want to check that out, guys, but I appreciate all of you watching. I appreciate if you leave a thumbs up, leave a comment, let me know you're enjoying these videos, and if you guys want to see a new topic be broken down, just let me know. Well, thank you guys, I'll see you lot in the next one.